Alright, so VWAP, what is it and how can we use it to make money? Rather than have you guys stare at my face, let's use motion graphics to illustrate this. VWAP, also known as volume weighted average price, is an invaluable benchmark that shines for day traders. Through volume and price range, VWAP helps indicate the average fair price of the stock. There's three lines: the upper band, the VWAP itself, and the lower band. When you trade above the VWAP, you're trading above the average price, which means relative to the day, you're trading higher than average. It can still go up, but VWAP is telling you it's statistically overvalued, which is a good sign to sell or short a stock. Now, if a candle's under the VWAP, you're buying below average, which can be a good deal, but it can drop even further. VWAP is different from something like a moving average because of volume. Volume is crucial for day traders using VWAP because large investors can be moving millions of shares, and it can move the share price in a non-beneficial way for them. Okay, so let's use a real example here with Facebook. So as I mentioned before, we're using a combination of the volume and the price. So when Facebook opened, market open here at 9:30, you can see the stock just plummeted. And during this time, you can also see how much volume there was for the actual stock. Almost 800,000 for the volume here. So that was a lot of movement for this stock. The top line here is the upper band. This is the VWAP itself, and then this is the lower band. The reason why this is important is because mutual funds, investors, and other institutions are actually using this to assess if it's a fair price. So rather than say that the VWAP indicates the average price, we should say fair price, because it makes more sense if you think about that if you're under the fair price, you want to buy in because obviously it's less than the fair price. You're getting a good deal. Now, if it's over the average price, then obviously that's a good point to sell because it's overvalued at that point. And large institutions and mutual funds, which have the power to move millions of shares a day, it's better for them to sell when it's above the VWAP because then they can lower it to that average fair price. So if mutual funds or large institutions sell when it's under the VWAP, that's pretty scary because at that point they're saying that even though you're telling me the fair price is, let's say, $12, if it's at $11.90 and you're selling it, that means that you don't even believe that it's worth $12 and it might drop even more. So that's a pretty scary signal and people can end up panic selling. So what's happening here is this purple line, the VWAP, is the average fair price for where the stock is. It's taking the volume and the price and working out an actual average for the stock. You can see pre-market where it's performing, and the reason why it dropped so much is because, of course, we have a lot of volume here. You can see throughout the day that it does continue to drop, but there's not as much volume here. So because of that, the VWAP isn't dropping as aggressively. Compare that to end of day when the volume was 2.5 million. You can see a massive jump as the VWAP moved downward here as the stock dropped because there was a lot more volume here. So volume is very important when it comes to VWAP. The more volume there is when during a certain time period, the more you will see the VWAP moving more aggressively along with the price. If a stock is above the VWAP, it's basically deviating away from the fair price, and large institutional buyers and mutual funds see that as an opportunity to sell without affecting the price in a negative way. Okay, so let's examine real time how Blink is affected by the VWAP. So as you can see in the pre-market, it jumped between anywhere from $9 and around 78 cents up to a max of almost $10.18, but it averages around these points, which is looking to be about 10.1. So right away when the market opens, it's already above the VWAP line, so people start buying in. You can see the volume starting to come in. Jump ahead 2 hours. These candles held above the VWAP line, so it was able to continue on its upward trend. But it started to get a little bit violent and it was getting close to the upper band, but it was rejected at this point and it didn't hold above it. At that point, it had a massive drop and it was going closer to the average. So at this point, you can see there was a massive sell-off. And this is what happens when institutions are actually selling off a lot of stock because they want to get the VWAP, they want to get the stock closer to the VWAP level, which is the 10.75. So that was the perfect opportunity for them to sell off to get closer to the average. As we move along, you'll notice that unfortunately for this stock, it actually went up under the VWAP line. And at this point, everybody started selling off, and you can see that there's a pretty decent amount of volume here. But once it touched the bottom VWAP line, all the institutions started buying in. So you can see these two volume indicators here. That meant that a lot of people were buying in here. And then because of that, it gave it a nice boost upward. It rode up pretty well, but it wasn't able to stay above the VWAP line. So it actually bounced off of it and kind of went sideways for a bit. And then finally, near the end, it was able to close above the VWAP line, but it was already end of day. So at that point, the volume just sort of died out, as you can see at the end here. It's still a pretty decent amount, but compared to what happened in the morning, it was really nothing. All right, so let's start making money using the VWAP. In order to do this, let's make sure we have a couple studies set up. So we'll go to Edit Studies, and the 3 studies you want are the VWAP, the Simple Moving Average. In case you don't know what that is, I have a video on SMA and EMA, and the MACD. For the Simple Moving Average, I'll be using the light blue color, kind of like a cyan color, so that way you can see it on the chart. The ideal situation is as follows. You want to make sure that the MACD is showing a crossover over its signal line, which is a bullish signal. You want to look for a candle holding above the 9-day SMA, which is the cyan line. And ideally, you want a candle that is trading lower than average price. So as you can see, the VWAP here is about, let's see, almost $448, but this candle is underneath that. So at that point, it's trading below average. But you can see that as it goes up and it closes here above the SMA line, this would be a good time to buy in. As we go along here, you can see that it does hold above the SMA line. At this point, it almost closes below, but it still holds. And look at that beautiful run up that we have. Even though it's above the VWAP and getting close to the upper band, it continues to rise. It doesn't break the upper band, so there's a slight sell-off past this point, and it starts to correct. So again, the volume here, keep an eye on that volume. And at that point, it starts to drop. And then you can see a little bit later on, it almost closes below the actual 9-day SMA, but it doesn't. But there is a MACD crossover, so that's something to consider. It moves a little bit sideways, 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 and it lasts for the whole day. But as you can see in the after hours, it's starting to show that there's a MACD crossover. We have a big candle here closing below the 9-day SMA. So normally I would have sold at this point because it's pretty much the time to get out. It's trading above average. It's starting to show a MACD crossover here, and it's closing below the 9-day SMA. Let's look at another example here. Let's bring up, let's say, Amazon. So let's zoom in here and check out one of these days. So again, we have a MACD crossover right here. At this point, we have candles holding above the 9-day SMA line. They're also considered trading below average at this point. So this is a beautiful time to buy in. Again, it jumps up, rises really nicely. It bounces off of the upper band. It doesn't cross over. So at that point, what does that mean? It's a sell-off. People are realizing that it's not going to cross above there. It almost does. Look at that wick. It almost does, but it doesn't make it. So because of that, it ends up weakening and bouncing off. There's a sell-off here. You can see again, look at that volume. Of course, it's not that big compared to the rest of the volumes, but it's a pretty decent spike. Look at the one after it, before it. It's pretty decent there. So at that point, it drops over. We have our first candle closing below the 9-day SMA. At that point, you'd want to get out. And luckily, if you did, you would have noticed the next candle was pretty big in terms of drop. And also, it becomes a MACD crossover. So unfortunately, this isn't that great. Again, we have later on, the MACD starts to go over a little bit, but it's not able to hold. Kind of goes sideways for a bit. And look, right at this point, it closes below the 9-day SMA. It's almost at the average price, and then it starts dropping. At this point, it's becoming less and less valuable, and kind of just goes under the 9-day SMA. So again, you have to look at all these factors and consider what's the best way to go about this using all of these elevating factors or depreciating factors for making a decision. I hope this video was useful for you. If it was, please leave a thumbs up and subscribe. I'm working my way to 1,000 subscribers, so if you can help me get there, that'd be super great. Making money with YouTube by teaching you guys how to trade and understand these indicators is basically a dream for me. So if you did subscribe, thank you so much. It really does mean a lot to me. Well guys, I'll catch you on my next video. Please let me know what you'd like to see on the comments down below. And as always, keep on making great trades.